Namaste. Good morning. We start understanding the depreciation in a more detailed manner. Today, the whole class is to just understand section 32 and its various parts. We have written a format for computing depreciation. I start from your theory notebook. We have written a format for computing depreciation. Opening WDV is nothing but last year's closing WDV. There cannot be any other aspect other than 31st March 2025 closing WDV becomes the opening WDV of 1st April 2025. Similarly, 31st March 26 will be 1st April 26. Okay. So under that in your theory notebook, notes. Preceding year's opening balance will become current closing balance. Sorry. Preceding year's closing WDV will become current year's opening WDV. Preceding year's opening WDV will become current year closing WDV will become current year's opening WDV. So last year's, the immediate last year's closing WDV. Okay, it is very interesting to understand something. Well, I don't know how DTC is going to interpret this. What is the difference between previous year and preceding year? For us, 25-26 is our previous year. Any year before that is preceding year. Okay, where do we understand this? If you remember, if you recollect our first or second inter class, we understand he should be in India for 60 days or more during the relevant previous year and 365 days or more in the 4 years preceding. Okay. So, if I look at from this year's angle, any year before that is the preceding year. Okay. So, the new definition says tax year. So now what now preceding year has to be necessarily defined. Here it is well understood. Okay, what is previous year? Okay, preceding year's closing WDV will become current year's opening WDV. Additions made during the year are divided into put to use for 180 days or more. Okay, on or before October 3rd and put to use for less than 180 days on or after October 4th. Okay. So we know one parent principle, which I am repeating, ready to use is known as put to use. Ready to use is known as put to use. Okay. This division is to provide 100% of eligible depreciation for all assets put to use for 180 days or more and 50% of eligible depreciation for assets put to use for less than 180 days. Shall I? Okay. You are understanding this, right? Can I? Okay. Okay. Right. So what happens? An asset is there in the opening balance. This year, for 4 months, I have used the asset. This year, I have used the asset for 4 months. After that, I scrapped it. I did not sell it. I just scrapped it and put in my godown. I did not use it at all. Will I get full depreciation or half of the eligible depreciation? Why? Put to use for less than? Any other answer? Any other answer? No full depreciation. See, this subdivision is only for asset purchased during the year. Let me be very clear to you. We did not say opening balance put to use for less than 180 clear. We did not even, I told you the other day itself, even if the sale has happened on 31st March, no depreciation. In income tax law, there is no depreciation for sales. Okay, only after sales balance available for depreciation. This subdivision, there are some questions which has tested this. This subdivision is only for additions made during the year. If some asset is there in the opening balance, in an old case law, Yamaha Motors case law, a machinery was scrapped, was not sold, was scrapped and put in their scrap godown. Can I still continue to claim depreciation? The answer is yes. Two things were given by the court. The term used is a past tense. Even if you have used in the preceding years, it will still be qualifying for depreciation. Second thing is, unless there is a value, it will never go out of block. We are going to do questions of this nature in the future. Like a mission was lost in fire. Unfortunately, it is not insured. So no value came. It was not salvaged. Can I continue to claim depreciation under block of asset method? Yes. Yes. Unless there is a value, we cannot take it out. We cannot take it out. Okay. So these are some of the nuances of this. And this 180 days condition is only for additions made during the year. Okay. And let us continue to speak about addition. Let us continue to speak about addition. Concept of addition. Concept of addition. the following shall be included slash excluded while computing the cost of addition. Cost of addition, the following shall be included or excluded while, okay, we all know purchase price, okay, I am very sure, installation charges, freight and other carriage expenses, direct expenses for the asset before putting into use. All expenditures before putting it into use should be capitalized. Should be capitalized. Cost of trial run. Cost of trial run. Any expenditure on trial run should be capitalized. Cost of trial run. Okay. Borrowing cost. Borrowing cost. According to ICDS 9, any interest or other borrowing cost till the date of putting the asset into use should be included in the cost of the asset. Should be included in the cost of the asset. Borrowing cost. Okay. The same with regard to our accounting also, that any expenditure, this is a very important adjustment in many questions. Shall I? Shall I? Okay. Yeah. May I? May I? Now my whole focus is on something which the class needs to understand from the top, then we will write it. Okay. Let us take that on 10th of October, I import a machine for $1 lakh, and at that date the rate is 80. Okay. We call this as transaction date rate. Rate prevailing on the date of transaction. So okay, in our books and in income tax, okay, asset account debit to creditors for asset 80 lakhs, both in our books and as per IT law. then there is something interesting that happens. On 31/3, let's take 2024. Here I'll take it as 2024. Here I'll take it as 2025. The rate is 85. The rate is 85. Accountancy and accounting standard says a statement called restatement. Now this 80 lakhs has become 85 lakhs. So accountancy tells P&L account debit 2 creditors for asset, another 5 lakhs, okay, has to be restated. My dear friend, in income tax law, there is no concept called restatement. There is no concept called restatement. The next thing can happen only on the date on which the liability is settled. The liability is settled. Suppose I am settling it this year, 10th October 2025. This year I am settling it. At that time, the rate is 87. At that time, the rate is 87. Accountancy says, because in account book, it will be 85 lakhs, which is reflected. Okay. Creditors for asset 85 lakhs. P&L account 2 lakhs. To bank 87 lakhs. This is accounting entry. You're clear? You're clear? Under income tax law, you want some water? Under income tax law, something else happens. Income tax law says whatever difference between the date of settlement and date of transaction should be added to the cost of the asset. Accountancy says it is an expenditure. Accountancy tells us it is not the cost of the asset that is increasing. It is only the liability to pay the creditor that increases. So the difference will be 1 at the time of restatement, 2 at the time of settlement will be taken to the profit and loss account, revenue account. Whereas income tax law says, no boss. If you have purchased the asset for 80 lakhs, paying 87 lakhs, it is the asset value which needs to be increased. It is the asset value which needs to be increased. Is the class understanding? Okay. Section 43A, Forex fluctuation. Section 43A, Forex fluctuation. Any difference in due to foreign currency fluctuation needs to be adjusted to the cost of the asset. No, I think I let it late, but now everybody. Sorry, I did not see the message. Sorry, Lija or Maithili, the Pravesh. I didn't hear the sound. That's why. Forex fluctuation. Any difference due to foreign currency fluctuation needs to be adjusted to the cost of the asset. Difference is between date of payment and date of transaction. Okay, please understand, there is no concept of restatement. There is no concept of restatement. Okay. So friends, between the date of settlement, there is no 31st March. If they suppose, if in a question they give you that I imported on 1st January at 80 and on 31st March at the rate was 82, ignore it and go. In income tax law, there is no restatement. Ignore that statement. Look for date of settlement. Look for date of settlement. Am I clear to you? Shall I move on? Shall I move on? Okay. Sale value of products arising in trial run. Cost of trial run is an addition. If you sell the products which come from trial run, it is a deletion, whatever is the sale value. GST GST if input credit is availed. So we all know that for vehicles and all, there is no input credit. In that case, GST will not be reduced. But for machinery and all, there are input credits. So in that case, it will be reduced. Subsidy or any compensation received relating to the asset. Okay, okay, right. Raja, can I ask you a question? In the initial class, we said, what is unapproved modes of payment? What are all they? One more is bearer check. Okay. Remember, unapproved modes are cash, cross check, bearer check. And the word unapproved is not used by the law. The word used by the law is otherwise than by approved modes. That is the exact words used by the law. Yes, friend? Friend, what are all the assets which are not specified assets? Yes. Okay. I'll ask the other way. What are all the assets for which depreciation cannot be claimed? Okay, there is a very interesting question which I can ask you now. In last class, also you are sleeping. It's very difficult to answer this question as yes or no. Okay, what is that? Goodwill. Remember, two are not specified assets. Okay, no, no, taking this. This is where we start this otherwise than by approved modes. So there is a limit across law which is 10,000. Across law, we are going to see 10,000 as a limit. In some provisions, the limit is 2,000. For example, 80G donation, if you are making 2,000. Okay. But generally, the limit is 10,000. Okay. Where on a single day to a particular person, payment in excess of rupees 10,000 is made otherwise than by approved modes. I will reduce, which means the law says it will not form part of cost of asset. It will not form part of cost of asset. I will not provide depreciation for that. Okay. If I am purchasing an asset for 1,40,000, of that 40,000 I have made advance payment by bearer check, remaining 1 lakh by account payee check. Asset value for income tax purposes is only 1 lakh and not 1 lakh. Please read through once. Please read through once. For those who are attending online, the material gets dispatched today. For those in the classroom, they got the material. You will get the material probably today or tomorrow, depending upon where you are. Okay. Shall I, friends? Shall I? In your practical material, I am leading you to page number 11. You can use for online, friends, the last class I put just for a day, that also you can use. Or now I have posted the practical material. Theoretical material is you will get it anyhow. We are writing the theory once in the classroom, so both will be dispatched to you today. I am there in page number 11, question number 3. Achyutan Limited gives you the following particulars as regards their plant and machinery: 15% block, compute depreciation, opening WDV. 3 machines pertaining to the block were purchased during the year. Machine Agni purchased and put to use in August. Machine Trishul purchased in September. But what is essential for us is put to use in December. So I will take only the second half. Okay. And Vayu purchased and put to use in January. On analysis, you identify Agni and Trishul are imported material machineries. Vayu is a purchased from Indian market. The director of the company had traveled to Germany for purchase of Agni. The cost of travel was debited to P&L. All expenses which are before putting the asset into you, which can be directly identified with the asset, should be capitalized. So this should go to capitalized. Trishul was purchased in September and trial run went till December. Cost of trial runs and the product produced in the trial run were sold on test basis for 14. The income and expenditure were taken to the revenue account. The mission cost was capitalized when the euro rate was 70. Payment was made and when the rate was 87.5. Vayu was purchased from an Indian company. The supplier demanded advance payment of the purchase 8 months before supply. The same was made by getting a loan from Bank of Baroda at 12%. The repayment starts as soon as the machine is put to use. As per the bank policy, 80% was financed. A old machine which has been sold for 1,84,000. Read through the question. Shall I, friends? Okay. Working note for cost of machinery asset. Shall I, friends? Okay. May I have your attention, friends? 11 lakh 80,000, the threshold machinery was when the euro was 70. 11 lakh 80,000. I have taken it on the transaction date. On the transaction date, the euro was 70. Okay, the euro was 70. It comes to 87. No, no, no. This comes to 16,857 okay, euros or something. Now I am paying 87.50. That means 17.50 higher, and this will be included in the cost of the asset. Remember, this is going to be a very popular adjustment in many questions. In many questions, this is going to be a popular adjustment. Please understand, forex fluctuation under income tax law should be adjusted with the cost of the asset. So it comes to 16, 16,857 into 17.50. 225. 2.95. Okay. Is the class understanding this? Forex adjustment between the date of settlement and end. For Agni, they have not yet settled or they have not yet said anything. We will not make any Forex adjustment. For Trishul, they have said, I have declared, I have settled it on 30th March 26. So I will include it. Are you following online, friends? Yeah. Can I? Can I? Friends. Now I am going to talk about borrowing cost. Now I am going to. What is the cost of Vayu mission? 12 lakh 65,000. Of this, 80% is funded by bank. Of this, 80% is funded by bank, and they have funded it for 8 months before putting the asset into use. 8 months. The supplier demanded advance for 8 months, 8 months before supply. So I have taken a bank loan. Bank loan is for 80% of the value. So 1265 into 80% comes to 10,12,000 into 12% into 8 by 12 into 12% into 8 by 12. 809,601. Okay. 80960. Repeating. Okay. Borrowing cost. 12,65,000 into 80% funded by bank into 12% rate of interest into 8 by 12. Fifteen lakh. Friends, check. Are you understanding? 43A and borrowing cost are repeated adjustments in our questions. Repeated adjustments in our question. We'll keep doing that all through the classes. But remember, it can only be adjusted with the cost of the asset, because they will specifically say, sometimes they give the value itself. Okay, the forex adjustment of 10 lakhs due to purchase of machinery was debited to P&L account. So I will disallow that expenditure and increase the cost of the asset, for which I will claim depreciation. Let's do depreciation. 4,45,572. Friends, the second of purchased asset 29 lakhs 960. That is the two assets of Trishul and Vayu into 7.5%. Into 7.5%. The balance, that is opening plus addition minus the deletion, or 44,2960 minus 29 into 15. Are you getting the same answers, friends? Please let know if you are not understanding anything. I'll again explain. Online students, Maitli, Lija, Parvesh, Bharati, are you all understanding this? Yeah, yeah. Okay. Tell me, Karan, you're stuck somewhere. Yeah, where is that? Sixty-two 95. Sorry, friends. 26,000. 65. 1, 3. Are you clear? May I? May I? May I, online students, have you completed? Shall I proceed? Yeah. So the first concept of addition is wherever the what is included and excluded in the cost. Remember, all expenditure up to the date of putting the asset into use, which will include borrowing cost. 43A, that is forex. Okay. Reduction, subsidies, and more than 10,000. Can I proceed? Okay. All right. Before going into the next aspect, special cases of addition, I want you to understand what is meant by succession. What is in income tax law? What is meant by succession? In our normal terminology, succession means inheritance. Literal language, succession means inheritance. Income tax law also says it is a sort of inheritance. They don't deny that it includes inheritance, but listening only. Okay, the term succession in income tax law is given for these things also: amalgamation, demerger, conversion. The term succession means X Limited amalgamates with Y Limited. All the assets of X Limited are taken over by Y Limited. Now, what is the value? Y Limited should record the cost of addition as demerger. One company splitting it into two. The second company is known as resultant company. They took over, a unit is demerged. So all the asset pertaining to that unit, they will take over. Okay. Succession means, apart from inheritance, which is a normal meaning as per literal languages, amalgamation, demerger, because in many places we are going to say, in capital gains, we can just say succession is not a transfer, which means transfer by amalgamating company to the amalgamated company, transfer by the demerging company to the resultant company, like that. And then third is conversion, and conversion is further subdivided into three. Okay, firm to company, company to LLP, sole proprietor to company. Everything is a succession. Repeating, apart from the inheritance, which we all know, succession means amalgamation, demerger, conversion. What conversion are we speaking about? A sole proprietor becomes a company. A firm becomes a company. Firm includes LLP. Company becoming LLP. In these cases also, so if a firm has been converted into a company, whatever assets prevailing in the books of the firm will become the assets of the company. And the value the company can record, that's what is cost of addition. Is the class clear? Okay. Draw this table in such a manner that it is. Sole proprietor to company. And don't even hesitate to ask me. Not that I'm not aware that my handwriting cannot be understood. Okay, I'm very much aware of. Can I? Can I? Special cases of addition. In all succession. What is succession? Amalgamation, demerger, conversion. Conversion is also further divided into partnership to company, company to LLP, sole proprietor to a company. In all succession, okay, WDV prevailing in the books of the transferor entity. In all succession, the cost of addition to be recorded in the books of the transferee entity will be WDV prevailing in the books of transferor entity. Okay. Okay. Did I tell you when can I charge depreciation under income tax law? On which date? Very good. 31st March is the only date. Okay, I'm nailing it because many questions are going to say like this. Today, 8th October, I completed my amalgamation. I can record it as on prevailing on 1/4/25. No other date depreciation is possible. When I say WDV, it is on 1st April. No other date it is possible to charge depreciation. We are going to get confused, get clarity. Get confused because in capital gains, you will always feel, well, up to this date, what we should do. No, sir, it is 1st April. Whatever, when I say WDV, it can never be any other date other than 1st April. Is the class clear? Okay, succession. Transfer by holding company to subsidiary company and vice versa. WDV prevailing in the books of transfer of entity. Shall I? Shall I? Friends, if holding company transfers an asset to the subsidiary company or subsidiary, that receiving entity can record the value of the asset as it was prevailing in the books of the transferring entity. No other value can be recorded. So I have a building which I was using for past 5 years. Now the building value comes to somewhere 15 lakhs, but the market value of the building is 25 lakhs. I transfer it to my subsidiary company. Subsidiary company can record the value only as 15 lakhs and start claiming depreciation on 15 lakhs only. Okay, right? And now in the next chapter, we are going to come and say these are not regarded as transfer. Obviously, this cannot be transferred. because you are not allowing me to transfer at any other value. Only if you allow me to transfer at 40 lakhs, there will be capital gain. He cannot record it at any other value other than 15 lakhs. My amalgamation cannot be. So in the next chapter, they are going to say amalgamation, demerger, conversion, holding subsidiary transactions are not regarded as transfer. You need not give me that provision, sir, because you are not allowing me to record at any other value. Are you understanding the logic? Okay, right, fine. Purchase of second-hand asset, actual purchase price or fair market value, whichever is less. Will be allowed, will be added to the cost. The cost of the asset will be purchase price, which is WDV. Add expenses. What you are saying is add expenses, direct expenses. In the subsidiary company, it needs to be installed, that expenses. For the purchase, for the subsidiary company, it will be coming under additions only. Okay. What I said is this particular, that is purchase value. They were writing an invoice. No, that can only be WDV prevailing in the books. I mean, WDV. Okay. Why I am again saying this is, suppose as per books, it is 19 lakhs. As per income tax law, our adjustment statement, it is 15 lakhs. 15 lakhs is only the value. 15 lakhs is only the value. Okay. Okay. Shall I? Shall I? Now, let us take, I have an asset in my books which is approximately 4,20,000, which is approximately 4,20,000. This asset I am selling to our friend Sneha for 10 lakhs. What is the intention? So that Sneha can claim additional more depreciation. If I sell to Sneha for 4,20,000, she can only claim it for 4,20,000 into 15%. Instead, I'm selling it for 10 lakh. So came the provision. If an assessee is purchasing a second-hand asset, if an assessee is purchasing a second-hand asset, but I didn't see you in the last class. Yes, I did. So, if the asset is purchased, a second-hand asset is purchased, actual purchase price or fair market value, whichever is less, can only be recorded by her. You understand the concept? You understand the concept? That's why they have kept it so. Now the next level. Now again from Sneha, I purchase back. I purchase back for 10 lakhs. The law says, boss, where an asset is transferred, purchased back. Now I am trying to increase my depreciation, claim of depreciation, so that I am avoiding payment of taxes. The value Watson can record in the books is actual purchase price or WDV at the time of sale, whichever is. I cannot record any other value other than WDV at the time of sale. Is the class understanding? Okay, right? where an asset previously transferred is purchased back. Where an asset previously transferred is purchased back. Actual cost of purchase or WDV at the time of original transfer, whichever is less. So for clear? So for clear? Friends, I have been using my house for my house property, residential house. Now I am introducing it as a business asset. Now I am introducing as a business asset. Previously, I was using it only for my residential purposes. It's not a business asset. Now I have purchased another house, so moved my family there. This house, I am going to use it as my office. Okay. House. Okay. Understand, please. Understand, please. What the law says is like this. Find out the WDB. How to find out? Had the asset been used for business purposes right from the date of its purchase, what would have been today's WDB? So 6 years back, I purchased it for 40 lakhs. 40 lakhs minus 10%, minus 10%, minus 10%. Do it for 6 years and find out the WT. Am I clear to you? The same principle apply for transfer of asset by foreign company to its Indian branch. Can I, friends? Can I? Okay. Back to your practical notebook. I'm there in question number 4. I'm there in question number 4, page number 12. Ramesh purchased and put to use a machine on 15th December worth 3 lakhs, which is eligible for 15% depreciation. He sold this machine to Ganesh on 1/1/25 for 3,20,000, who, after using the machine for his business purposes, sold back to Ramesh in 25/26 for 310. Compute the amount of depreciation and capital gain, assuming this is the only machine in the block for both Ramesh and Ganesh. Raja, WDV on the date of transfer. Suppose the foreign company transferred the asset on 15th November 2025. What value can we record it? Very good. I want to again make the class understand, because these are unique dates they will give you. 15, 12, 22. Okay, 1, 1, 25, 15. Sir, my WDV in income tax law, 31st March is the only date I can claim depreciation. And my WDV will be found out like that one. Okay, right. Let's start. First, I am doing for Ramesh. Purchase value of asset on 15th December 2022. 3 lakhs less depreciation at the rate of 7.5% for 22-23, because it is put to use for less than 180 days. So 7.5%. Are you so far clear up to this point? Remember, the question says he sold it on 1/1/25 for 3,20,000. Sale value as on 1/1/25, 3,20,000. Short-term capital gain for 24/25, as this is the only mission in the block. So the block ceased to exist. So far, am I clear to you, friends? So far, am I clear to you? Now comes the next part of the provision. Opening WDV as on 1st April 25 nil, because you have sold the asset, it is nil. Opening WDV on 1st April 25, it is nil. Now look at this. Look at the question. It says, sold it back to Ramesh on 15/11/25 for 3,10,000. For 3,10,000. Addition. Purchase back of same mission which is already transferred. Which is already transferred. Okay. Purchase price 3,10,000. I bought it back for 3,10,000. WDV on the date of transfer 2,35,875. 2,35,875. Are you understanding, my dear friends? 2,35,875. So this value can only be considered. Okay. Whichever is less can only be taken as cost of addition. So 2,35,875. 2,35,875 less depreciation at the rate of 7.5% put to use for less than 180 days. Okay. 235,875 into 7.5%. Any doubt, ask me. Can I? Are you following all of us on the online students? Can you? Are you all following? Yeah. Now we let's do for Ganesh. So what did Ganesh do? He sold this machine to Ganesh on 1/11/25 for 3,20,000. Ganesh purchases a second-hand machinery on 1/11/25. Ganesh purchases a second-hand machinery on 1/11/25. Actual purchase price is actual purchase price is 3,20,000. FMB on the date of purchase is 2,50,000. Whichever is less. 2,50,000 can only be recorded. Depreciation at the rate of 7.5% for FY 24-25 because it is put to use for less than 180. 111 only I purchased. 24-25, right? He is purchasing it on 111-25 for 1/1/25. Sorry, my 1/1/20. Is the class clear? Shall I move on? Shall I move on? Friends, shall I? Case B. Sudarshan purchased a building for 30 lakhs in April 23. He has let it out for till July 10, 2025. The tenant vacates on the said premises. On July 11, he converts this building into business premises for the purpose of carrying on business. Compute the value. 10% is the rate. Compute the value. Is this right? Do the part 3 also, same nature. Whole foreign branch to Indian subsidiary. A foreign company purchases a computer on 10th November, 12,060 per dollar at that time. Biogas 20,000. These plants were outside India. On 1st March 26, the company starts a manufacturing unit in India, transfers them to Indian factory, find out actual cost to be recorded. Depreciation is 40%. Same, which we have written in the theory notebook. Don't worry about the notes. If it is an important note, I will tell you. Otherwise, you look up because we have written it in the theory. Finally, what happens after the class gets over is when I send you this PDF, you need not even look into anything else. You will have it. Okay, that doesn't mean okay, sir. I'll exit now. Okay, after class are over, just and so don't worry about these notes. If it is an important note, I will tell you. or you understand inference, you're getting the same answers. Once more, yes. I mean, not from 1st March, less than 180 days it is used, so 20%. The normal rate is 40, now it is 20. Yes, yes. Am I clear? Okay, right. Shall I? Anybody still? Okay. So, special cases of addition. I want you to leave 4 5 lines and then write the next thing. Okay. I know we have to link from somewhere else. So leave 4 5 lines, special cases of addition, and then we progress. Okay. Okay. So in the format frame, my dear friends, opening WDB, now we know additions, we know extensively. We know extensively. Put to use for 180, less than 180, more than 180. That split is because of eligible depreciation. Okay. Deletions, sale value. Please leave 3 4 lines and start. The actual sale value, deletion. The actual sale value will be reduced from the block of asset, where asset is scrapped but not sold. Nothing can be reduced from the block value. Under income tax law, only diminishing balance method can be followed. However, electricity companies has an option of following straight line basis. Sometimes this needs to be remembered. Only the popular rates needs to be remembered. There are no other rates. Okay. Asset rate. building official purposes as the class goes by, when we start doing more questions, you will be remembering this rate. Plus, our office also helps us to remember. So do not worry. So I was just asking Archana, what's the depreciation rate for mobile? Because is it computer? It does more work than computer. What, friends, Parvesh? What is the depreciation rate for mobile phone? I go and buy a tally software. What is the depreciation rate? Intangible, 25%. I purchase a computer which has an inbuilt Microsoft 365. 40. 40. Yeah, the answers are right, actually. Our friend's answer on mobile phone is also right. Mobile phone is not a computer. I'll answer all these things. But then one more thing. What can be the rate of printers? Why? What should be the rate of scanner? Scanners? What should be the rate? All related to computers. Exactly, that's the wording I want. What is an accessory? What is a peripheral? What is an accessory? You will immediately show. Okay. That which is integral part. Law has been written long back. They never know at that time from mobile you can give print and all. So print can be given only with a from a computer. Without a computer, what will you do with a printer? Okay. In this room, very honest, personal. Without a computer, if the printer is there, that is Bharatwaj Institute. Okay, I used to ask them, what is that you are having at the corner? Are you understanding? No use. So An accessory takes the form of the main element. If a hardware is purchased with an embedded software, Windows comes to you along with your computer. Microsoft 365 subscription comes to you along with your computer. In all those cases, we understand that it is the rate of the computer which will be there. But as she was saying, mobile phone is a standalone device. I don't need a computer. EPABX, that is in your office intercom, that might be connected to a computer, but it is a standalone device. Am I clear to you? Okay. Federal Bank Limited. Yes, 15%. Yes, 15%. It's a standalone plant and machinery, generic nature. Okay, these are all done. Okay, accessory takes the depreciation rate of the original item. Accessory is one which cannot perform operation without the main element. Hence, printers and scanners will be eligible for 40% rate of computers. Inbuilt software in a hardware is also eligible for 40%. So sure. Can I? Shall I move on, friends? Okay. So now we have completed the format: opening WDV, additions, deletions, depreciation. Okay. And the rates of depreciation. We have come up to the aspect called normal. Now I am going to talk about additional depreciation. This is apart from claiming the normal depreciation. Four aspects of additional depreciation. One, available only for manufacturing entities, not for a non-manufacturing, not for a trading or a service sector, only manufacturing entities. Available only for plant and machinery, new plant and machinery purchased and put to use during the year, not for building, not for furniture fixtures, not for intangibles. There are four specified assets. It is only for new plant and machinery. New here means that which is not already used. The plant and machinery should be directly or indirectly used in the manufacturing process. If these conditions are satisfied, the fourth point is you will get 20% additional depreciation only for that year, only for the year of purchase. Of course, I'm going to have an interpretation there. Okay, now concept of additional depreciation. Four falling branches, my dear friends. Four falling branches. Four falling branches available only for manufacturing entities. Available only for manufacturing entities. It can be sole proprietor, firm, company, cooperative, charitable, anything, but only a manufacturer. Available only for new plant and machinery acquired during the year. Available only for new plant and machinery acquired during the year. New means that which is not used already. Okay. Such plant and machinery should be used directly or indirectly in the manufacturing process. Such plant and machinery should be used directly or indirectly in the manufacturing process. Okay. Okay. Shall I, friends? Available for new plant and machinery acquired during the year. Such plant and machinery should be used directly or indirectly in the manufacturing process. A machine which is used in the manufacturing process acquired. Will I get additional depreciation? Yeah, it is used for manufacturing. Will I get additional depreciation? Yes. A car is a plant and machinery. We all know the definition of plant and machinery. A car is a plant and machinery. Can I claim additional depreciation? A computer is a plant and machinery. Can I claim additional depreciation? Book is plant and machinery. Electrical appliances are plant and machinery. You are understanding? Okay. I am having a forklift which I am using in my factory for bringing raw material from the raw material godown to the manufacturing place. Can I claim additional depreciation? Yes. A computer which is used for testing of quality. Yes. So, why I am again stressing is the word P and M, plant and machinery. The plant has an importance also here. Okay. Plant also has an importance here. Okay. Vehicles, computers used in manufacturing process are also eligible for additional depreciation. In the first class, I spoke about this. Now again, this company MM Forgings purchased an asset in November and claimed 20% additional depreciation. Income tax department said since you have put it to use for less than 180 days, you can claim only 10%. The company said, boss, this is a rate promised by the finance minister. This is the rate promised by the finance minister. Income tax department argued, true. It is the rate promised by the finance minister, but interpretation of law. What finance minister said is the rate. And if the law says, if you put an asset to use for less than 180 days, you can only claim half of the eligible depreciation. So you can claim 10% only. You understanding? The court gave a provision called harmonious construction. Boss, when there are two, one is a finance minister's promise, another is IT law. Both should be given effect to. Both are not wrong. So the law said, so the court said, which became a law, where assessee claims only 10% in the first year. Why he should claim 10%? Used for less than 180 days. Balance 10% can be claimed in the next year, in the immediately succeeding. Can I? Can I? Under all these things, note, under all these things, a note, additional depreciation cannot be claimed if assessee is under concessional tax regime. Read through. Is it clear, friends? Is it clear? Okay. Right to your practical notebook. I am reading question number 5. Mamekam Limited gives you the particulars of plant and machinery which is directly used for manufacturing. Block 1, Block 2, Block 3, opening WDV, additions made during the year, deletion. Plant A and C were put to use in September. However, plant B is put to use only in the second half of the year. Compute eligible depreciation. There are 3 blocks of plant and machinery. All the 3 are used for manufacturing only. Is this understandable? 15% is because 15%, 50% of 30%. You want it more clearly? Can I? Can I? And now I want the class to understand this additional 57 lakhs into 20%. 57 lakh into 20%. Okay. Some 11 lakh 40,000, right? For block 2. Can I claim additional depreciation? Okay. So I'll write the notes under. The answer is yes. I want to come to this point and teach you this. Normal depreciation is for this level. Only if there is a balance you can claim. Additional depreciation is for this. If there is an addition and the conditions are satisfied, irrespective of whether the block value exists or not, you can claim additional depreciation. Even for block 3, we are going to claim. Even for block 3, we are going to claim. Is it a manufacturing entity? Have they purchased a new plant and machinery used for the purpose of manufacture? Give additional depreciation. It has nothing to do with balance available in the block. Balance available in the block is only for normal depreciation. Additional can be claimed. I will write the provision under the solution. Now, 4 lakhs into 10%. And also 17 lakh into 20%. Are you clear? Are you clear? All of us? Okay. I am writing the notes. Note 1. Total depreciation 1123,800 plus 4,500 plus 11 lakh 40 plus 40,000 plus 3,40,000. 26,48,300. Clear? Clear, friends? Clear? Okay. Do the next question. For 2 years, you need to. For financial year 24-25, 25-26, you need to. Do the next question. Online students, do the next question. This is the answer I'm also getting, like how Maitli said. Can you please just verify? Did you get stuck? 8 lakh and 25 is the last year's asset. So next year also, for this 11,50,000, they can do the 10%, provided they continue to be in the Finance Act tax regime. Dija, you got it? Yeah. Lights and Powers Limited. I'm going to the question 7 in page 14. Furnishes the following: compute depreciation allowable. The company has opted for the depreciation allowance on the basis of written down value. Opening WDV. Purchased a second-hand machinery on 29/12, which will not be eligible for additional depreciation. Which will not be eligible for additional depreciation. Mission Y, purchased and installed for power sector, acquired and installed for a new air pollution control equipment, which is very much part of plant and machinery, without which manufacturing is not possible. So it will new machinery acquired and installed on 23/11 for the purpose of generation of power, sale value of old machine, purchase value, WDV, all those things ignore. We want only the sale value 3,10,000. So there are two blocks. One is 15% block, one is 40% block. There is a sale value. Is this right? Am I clear? Am I clear? Okay, right? Normal and additional depreciation. This is how it should be computed. Remember, additional depreciation is not available for concessional tax regime. Okay, when the questions arise on concessional tax regime, we will not do the additional depreciation. Okay, we end the class here today. Day after tomorrow morning, we continue with proportionate depreciation. Meet you 6 o'clock day after tomorrow. All the best, friends. All the best, online friends.